Understanding MSCI, a deep dive into Morgan Stanley Capital International. MSCI, or Morgan Stanley Capital International, is a pivotal player in the investment research field. Established with the aim of providing comprehensive investment data and tools, MSCI's offerings have become indispensable for institutional investors, hedge funds, and investment managers around the world. This article will explore what MSCI is, its history, its indexes, and its significance in the global financial ecosystem. A brief history of MSCI. MSCI was formed in 1986 when Morgan Stanley acquired the licensing rights to data from Capital International, which had introduced several stock indexes as early as 1965 to reflect international market performance. Initially, Capital International's indexes provided the first global stock market measures outside the United States. After the acquisition, Morgan Stanley began operating under the MSCI acronym. In 2004, MSCI further expanded its capabilities by acquiring Barra, a renowned risk management and portfolio analytics firm, for roughly $816.4 million. This acquisition allowed MSCI to provide enhanced analytics and risk assessment tools for investors. Following an initial public offering in 2007, MSCI became an independent company, successfully trading on the New York Stock Exchange, NYSE, under the ticker symbols MSCI and MXB. This independence was solidified in 2009, marking a new chapter for the firm. MSCI's core offerings. Investment tools and data services. MSCI specializes in offering a suite of services that includes risk and performance analytics. Through its Barra and risk metrics tools, MSCI provides clients with critical insights into portfolio risk and performance. Governance tools. Specialized offerings help institutional investors analyze the governance structures of companies worldwide. MSCI indexes. Perhaps the most recognized aspect of MSCI's output is its vast array of stock indexes. With over 280,000 indexes available, MSCI's indexes cover various geographic areas, company market capitalizations, and sector-specific categories. As of December 31, 2023, approximately $15.6 trillion in assets under management, AUM, use MSCI benchmarks, illustrating the firm's significant role in the investment landscape. Notable MSCI indexes. 1. MSCI Emerging Markets Index. Launched in 1988, this index includes stocks from 24 emerging economies such as China, Brazil, and India. It's a primary tool for investors seeking exposure to fast-growing markets, providing insights into the performance of stocks in these regions. 2. MSCI Frontier Markets Index. This index focuses on particularly volatile markets, tracking 28 frontier countries. It can be seen as a speculative avenue for investors seeking high growth but also comes with heightened risks associated with lower liquidity. 3. MSCI All-Country World Index, ACWI. MSCI's flagship index tracks over 2,800 stocks from both developed and emerging markets, covering about 85% of global market capitalization. It serves as a representation of the global stock market, providing a broader investment perspective. 4. EAFE Index, concentrating on Europe, Australasia, and the Far East, this benchmark covers developed countries outside of North America. It includes 766 stocks from 21 countries, allowing investors access to stable, well-traded international equities. Index weighting and reviews. MSCI's indexes are market cap-weighted. This means that larger companies have a more considerable influence on the index's performance, reflecting their economic significance. Each index undergoes a quarterly review and is rebalanced semi-annually to maintain its integrity as a market benchmark. Changes in the index may necessitate adjustments in the portfolios of mutual funds and exchange-traded funds, ETFs, that mirror these benchmarks. The purpose of MSCI. At its core, MSCI provides essential tools to assist in the decision-making process for various stakeholders in the investment industry. By offering a granular analysis of different markets and sectors, MSCI helps clients make informed investment choices, assess risks, and build diversified portfolios. Furthermore, institutional investors often rely on MSCI indexes as benchmarks for performance comparisons. Comparing MSCI with other indices. MSCI versus S&P 500. While both MSCI and the S&P 500 provide valuable investment benchmarks, they differ primarily in scope. The S&P 500 is a market capitalization-weighted index of 500 of the largest companies in the U.S., representing a significant portion of the U.S. equity market. In contrast, the MSCI All-Country World Index encompasses stocks from both developed and emerging markets, providing a more global perspective. MSCI World Index Composition. The MSCI All-Country World Index notably includes over 2,800 stocks from 47 markets, representing both the developed and emerging segments of the financial landscape. Conclusion. Morgan Stanley Capital International, MSCI, plays a crucial role in the investment world by providing a wealth of data, tools, and indexes designed to aid in investment strategy and decision-making. With its comprehensive suite of services and well-respected indexes, MSCI has become a cornerstone of investment research and analytics in today's global financial markets. Whether you're a seasoned institutional investor or an individual looking to understand global market trends, MSCI's indexes and analytical tools are invaluable resources that cater to a diverse range of investment needs.